impact and opportunity behind them.
Let's talk to Sam. He's in Toronto. Good evening, sir.
Hi, I'd like to have your opinion on Enerplus Resources. Do you think is it a buy at this time?
Sam, I'd avoid Enerplus. It's one of those oil and gas positions that has been a weak performer. A lot of people want to buy that for the yield. I don't like to buy laggards. We prefer to buy those that have things going in their favor. And at this point, I would just steer clear. It's not one that I'd focus on.
Yields 8% on that one, but that's a rough-looking chart. Here's Ann in Edmonton. Good evening.
Yes, good evening. Thanks for taking my call.
You're welcome.
I'd like an opinion on Canfor, please. Is it a hold, sell, or buy more? I hold a small amount.
All right, thanks, Ann.
Okay, so Canfor Pulp has been basing on the price chart over the last little while. Market seems to be hardening up a little bit for pulp prices. I think that probably this one can go higher over the next couple of months. There is some rotation going into the more basic material stocks, and you know, it wouldn't be hard to see, you know, $13, $14 on this one.
We know that the lumber stocks did well last year. Did you manage to capitalize on any of those movers?
Yeah, we're invested in Canfor Lumber, which is a favorite of ours. We've got a couple of U.S. forest products companies as well. So we would be more focused in the lumber companies than in the pulp in particular.
U.S. companies, what, Weyerhaeuser or?
Well, we've got a little bit of International Paper, and we've also got a little bit of Weyerhaeuser.
All right, very good. A short break here. Actually, no, what am I saying? We have Grant. He's in Calgary. Go ahead, Grant.
Oh, David, good afternoon. Can I have your thoughts on American Capital Agency? I would be buying it and holding it in a taxable U.S. dollar account.
Right.
And I'm wondering what Obama's new tax reforms are going to do to it. Thanks kindly.
Okay. Well, I won't comment on the tax reforms, but what I will say is some of the mortgage REITs in the U.S. have had a tougher time recently because, in effect, the Fed's purchasing program of mortgage backs is squeezing out the mortgage REITs. Obviously, the Fed has lower cost of capital than the mortgage REITs do.
Yeah.
So that's posing a headwind in the short run. I had somebody ask me about Annaly Capital Management as well, and it's in the same boat. So I think it's a good business model. I don't think that rates are going to shoot higher in the near term. That's, I think, a concern in the market in the short run. But the Fed is definitely making it difficult on the government-sponsored mortgages.
And making it difficult because they're driving down the price?
They're driving up the price, driving down the yields that are available. So if you're a leveraged investor in mortgages and you're having to pay higher and higher prices, it makes it harder to make money.
Right. Now, I've reversed that equation, of course. But are there fewer of them to buy now because of the Fed?
There are fewer mortgages available to be bought, absolutely.
Right.
Well, you know, look at what the Fed is doing. Just take the Treasury market, for example. The Fed currently is purchasing 80% of the Treasuries being issued by Treasury. 80%. When you think about those numbers, they're extraordinary. So certainly that has an impact on the market. I mean, it really is in some ways a little bit of a rigged market. And so we all just have to deal with this new market that we're in. But it makes it difficult to identify where value is.
Right. For sure. Let's take a short break here with David Burrows, and we'll come right back with more questions on North American large caps.